All right, good early morning, peoples. Bruce with Targeted Wealth Creation back at you. Okay, here's Defiance. So Defiance followed Roundhill in the sense that they moved up. The only one that didn't is YieldMax, right? So Defiance and Roundhill on their weekly payers for the Nasdaq 100, the S&P 500, the Russell 2000, they moved those up for their pay dates. Now Defiance on Friday still will declare for these guys, SPY-T, the USOY, which is the USO oil index. So these are and the Nasdaq 100. So these are more targeted incomes, right? You'd say, well, why? They already have Nasdaq and S&P 500, but these are targeted around that 20%. So we'll get the declaration this Friday, and then pay date will be Tuesday, 12/4, right? December the 4th. But for these weekly payers, it seems like everybody moved them up except for YieldMax, because only a few of YieldMax, right? The YMAG and the YMAX. So those won't get paid till next week, and those will get declared prior to the market on Wednesday morning. So we're at early Tuesday morning right now, depending on which coast you're on. Um, all right, peoples. So let's jump in here. I don't have a lot because you got these guys. So as a reminder, I reorganized this, right? Before I was tracking all this stuff going back over a year, and it had the 3-for-1 split, and it was beyond the 12 months, right, for the annualized number. So I moved it back and said, okay, let me track these since they went to weekly, because they're kind of different animals. And this will lead to me being able to compare Roundhill to Defiance when they're both on a weekly basis. So we're building up to where I'll have something out on that, because as of 10/9, they're weekly. It'll almost be like comparing YMAG and YMAX to some other fund that was similar, right? Where they paid weekly, because they used to pay monthly and now they pay weekly. And weekly's different, right? You get 52 in a year instead of 4 times 12, which would be 48, right? So we all know some of those nuances. So up here is sort of my summary. Down here is just what happened. So let's jump down here. QQQY, the NASDAQ 100, declare, okay, 11/26. Ex-dividend, the day before Thanksgiving, 11/27, with the Thanksgiving holiday, you pay on this. Well, normally this declaration is a Wednesday, ex-dividend is Thursday, and pay is Friday. But this one's skewed, right? So think of it as a Tuesday, a Wednesday, and then because of the holiday, a Friday. So in order to get paid this week, they needed to do it the way they did it, just like Roundhill. All right, so 28.27, right? 28 cents, 0.2827. That's yielding 44.40% based on the current NAV of 33.11. Actually, that needs to get updated, right? Because that is not the current. I already have it up here in the table, so I'll just refer to it, but I want to double check it. IWMY. Actually, I'm doing a different one there, right? 32.95. Okay. So what I want to do is say it's equal to this guy. Whoops, that's not what I want to do. Oh, man, I messed up something. Boy. What do you make? Okay, so this is equal to this guy. This is equal to this guy. And this is equal to this guy. All right. That's what happens when you put it in different places. I knew I had updated it. Okay, guys. So it's a 44.03 yield, right, based on the current price. And this really should say the actual closing price of 25 because you declare effective the 26th. All right. So all this is in sync. So you can see who paid the most, which has been the trend, right? You look at Roundhill, you look here. So look at this. This is in a date format equals F10. Why? But that's okay. I want to make that a number. Okay. Make one little mess up and it sends everything off. Okay. So 44.03 yield. The S&P 500 had a lower yield, 36, and we had the highest on the Russell. Again, I would say that almost fits. I usually show when I do Roundhill in the other order, I show the S&P before the NASDAQ. But the same order basis, right, of how much they're yielding. Okay. So what is important is to look at this kind of stuff, right? This tells me a lot more because you know how I harp on total return. Look at how close these guys are. Okay. Now, smaller sample size. So you look at our distribution yield, right? Small sample. So they're very high. The NASDAQ 100's got a 50 in the middle. This is the lowest yield, the S&P 500, but the most spread out across the number of payers, right? And then our number of stocks in the ETF. And then the Russell has been trending up because it's been playing catch up. It had underperformed for quite a while. Now, look at your NAV, though. What happens here when you have a small sample and you start to decline? Even a little bit, it gets magnified when you annualize it, right? So here we are. We're saying, here's today's price. Whoops. Why is that? Okay. So I'm using today's price. And look, here's what it was on October 9th, right? So you have a launch date and you say, okay, it's 34.69. Well, it's 33.69. So it's $1.30. What is $1.30 to 34.69? Well, it's 3.75%, right? But that measures it from 10.9 to 11.25. So if I drop 3.75, I have to magnify that, right? That's only a 48-day ownership. So I multiply it by 7.6 to get it up to 365 days. So when I do that, whether this turns out to be the case, it could be worse, it could be way better, right? Your NAV loss when you annualize it is 28.49%. So while you're, and the same thing on the yield, we've been getting some nice yields, right? Our yields are, let's take QQQY, is 44% it's yielding, right? So we're saying based on the distribution for this period of time, it's up. Let me make sure these AI, right? Did I put these over here? Yes. Oops. That should be AK. What is happening here? Let me double check it. Oh, no, I think that's right. Yeah, it's got AK there. AK. Yep, AK. Okay. So we've got all of the current, right? So hence, you're looking at a 40%, a 50%, and a 61. Those may not pan out over time. But then again, so might these go down. So very interesting, very tight, and they're almost in inverse. This guy is the highest yielder. This is second highest yielder, this one. And when we look at total return, the NASDAQ 100 is winning. But again, when it's so similar here, the Russell is paying you more, right? When it's this close, I'd be buying the Russell if I had to pick between the three. Now, that trend will change at some point. When you play catch up, then you become eventually overvalued, and maybe the NASDAQ, they don't have a Dow because it's so short, but that's the correlations to these kind of things. The other thing I tell people, when you look at the scope of the world, the US is the largest financial market, right, for stocks and bonds. So when international buys stocks, your big hedge funds, your big institutional money in Switzerland and England, um, various large countries, Netherlands, they tend to focus on the Dow. They relate to a Caterpillar, a Coca-Cola, right? So we have a lot more tech now in the, I shouldn't say a lot more, but you do, you only have 30 stocks, but you do have some tech. But the NASDAQ 100 is where your tech heavy is. But the largest investors in the NASDAQ 100 are America or retail, right? Institutions as well. But if you look at international institutions, because they have things like, oh, well, it has to have a 5-year track record in order for us. And, you have similar things in the US. So I would say your largest institutional money um, is in the Dow, but also in the Nasdaq 100. But internationally, they tend to favor the Dow. So if you ever look and those get out of kilter, like the Dow's heading up, you can know. Like I imagine after the Trump election, there was a certain sense of whether that was positive or negative on an international basis, and that would affect whether they were buying the Dow or they weren't. Sort of like, okay, I'm going to invest in U.S. stock market, but where do I want to be? Okay. So I thought I'd just pass that on to you. That's some wisdom that not everybody is akin to. All right. So on this SPY T, USOI, QQT, those won't announce till Friday. So they'll get their declaration on Friday. I'll come out with something for that, and then we'll be able to go in and see how they're trending, right? On the sample sizes, you see 3, 5, 6, right? So you had the SPY T, because these are targeting, both of these are targeting about a 20% yield. So this NASDAQ 100 has some catch up to do there. But it looks like it's being beat up. Yeah, it's losing 12% on its gain loss. And look at this guy. This guy's getting killed. The oil index, because oil is down. So if you look, it's showing a drop from May to October, annualized, of 43%, whereas the real loss is 24%. So almost a double, right? When you add the number of days, you'll see what's going on with there. They're using a 1.825, so it's not a 2 to 1, but 24 becomes 43. So while the yield's great, this is a classic case of, hey, I'm getting a 47% yield. Well, your NAV is annualized. Your NAV is losing 43, so you're only 3.41. Put it in the money market, and get 4.5. So, now granted, there's time for oil. Oil right now is reflecting an economic malaise ahead. When oil starts to take off again, it says that it sees demand greater than supply. So it will be interesting. I have a feeling a lot of people are very pessimistic. I think into 2025, if we end up, but when this recession is looming, you see oil cheaper, and that's kind of what we're seeing. It'll be interesting to see which way it goes ultimately. Okay, guys, that's what I got for you. I don't want to belabor this anymore. I'll get YieldMax when it's out. Again, YieldMax is not doing early, people. Okay, guys. Again, this is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice, for fun and entertainment. Have a great one, people. Again, the yellow is the current yields, guys, for QQQY, WTE, and WIMY. If you were listening to all that and you just wanted to see your number, The yellow are your pays. Okay, guys, bye for now. Have a great one.